Vanguard is the second largest investment management company in the entire world, only behind BlackRock, with an estimated assets under management of over $8 trillion. To give you some context on how massively large that is, there are only two countries in the world with higher GDP than that, and those are the US and China. So how crazy is that? It's just unbelievable. Anyway, Vanguard grew in popularity thanks to their various funds and ETFs that typically have low expense ratios and are often used by more passive minded investors that want to own a basket of many different stocks within a certain fund rather than having to handpick each individual stock themselves. So essentially letting Vanguard do most of the work for them and trusting them to buy the best available stocks. And as such, Vanguard has now grown into the largest issuer of bond funds. They're the second largest for ETFs, and they're the number one largest for mutual funds too. So obviously at that gigantic size, they have a ton of influence over the stock market depending on what they buy and sell. Well, in today's video, we're running through the top 5 largest stock purchases that Vanguard made in their most recently published reports, which by the way includes 3 brand new additions for them. And they're actually stocks that, a couple of them are stocks that I've never even mentioned before on the channel either. So that's going to be very interesting and fun to look at. And of course, as always, I'll even give you my own opinion on each of these stocks. I'll let you know if I'd consider buying any of them myself too. And I'll even rank them from best to worst as well. So it's going to be a ton of fun. I love doing these videos for you guys. I hope you're enjoying them too, but let's not waste any more time. Let's go ahead and jump straight into the top 5 most recent stock purchases that Vanguard made in their last reported quarter. All right, now we'll be counting up here from smallest to largest position in the portfolio, and coming in at purchase number 1, it's the first of those 3 brand new additions that a couple of which I've never talked about on the channel before. And the first of those is CRH, ticker symbol CRH, which Vanguard scooped up 27 million shares of last quarter, or about $1.5 billion. And even though that's, about $1.5 billion, that's only worth about 0.04% of the entire pie. So shows you how big they are. Anyway, if you've never heard of CRH before, they're a very large building materials company that mostly serves the construction and manufacturing sectors, providing them with things like granite and limestone and sandstone and cement and concrete and asphalt and many other things. Now, this is a business that, in my opinion, is a very strong one because the world will pretty much always need these types of products and services, especially as it grows larger and becomes more developed, which benefits CRH heavily as they already hold market leadership positions in both North America and Europe, with even more locations spanning across about 30 different countries worldwide. The result has mostly been strong for their financials too, with only experiencing dips during macroeconomic downturns that are really out of their control anyway, like the 2020 lockdowns, for example, where the world was really forced to shut down. But soon after, they recovered to new record highs and are still expected to post single-digit increases to revenue in each of the next 2 fiscal years. One concern I do have though is our high interest and mortgage rates at the moment that do discourage lending and spending on big projects that would normally help CRH. However, so far it hasn't really affected them too much, and with the Fed likely to start lowering rates this year, it could actually turn into a bit of a tailwind if the economy is able to avoid recession going forward. Time will tell, of course. A recession, I think, would obviously hurt them a lot, but so far this stock has been a great performer long term. Although it does have some pretty frequent volatility, so I would probably rather wait for another dip before buying in myself. However, even here the valuation is still pretty good, trading a bit cheaper than the sector on most valuation metrics, and it even comes with a nice little dividend above 3%. The business is a little boring for my taste, but it feels like a pretty solid long-term stock here to me, and it's one that I'm even considering picking up myself. I'm gonna probably wait, like I said, for any future dips, but I think it's a pretty solid stock. I'm going to rank it in the middle for now at number 3, and wait to see what other stocks here we have and see if we need to adjust it at all. Moving on to purchase number 2, though, we actually have the second brand new addition, which I've also never talked about before on the channel, and that is Veralto Corporation, ticker symbol VLTO, which Vanguard scooped up over $1.7 billion of at also about 0.04% of the overall portfolio. Now, this one is actually a newly IPO'd environmental and applied sciences and solutions type of company that was spun off from a larger biosciences conglomerate called Danaher. And since then, Veralto has been a little up and down, but is currently trading right near the middle of its 52-week range. We'll come back to the stock in just a second though, but if you're wondering what this company actually does, well, Veralto currently holds around 13 subsidiary companies under their belt, which spans over 240 global locations, so they are pretty large. And the vast majority of their work really goes towards the analysis and treatment of water, as well as different kinds of services related to food and pharmaceutical products as well, which altogether makes up over 80% of their sales. For example, they claim to manage or work in some way on the drinking water of about 40% of the world's population, which is huge, while also treating 12 trillion gallons of water for recycling and reuse every single year, and about 80% of the top global consumer packaged goods and pharmaceutical brands are set to use their product quality and innovation technologies as well. So in terms of size, they are definitely huge, and because these services are pretty much always going to be needed in the future, it's resulted in some strong financials year after year, with also some pretty decent margins too that are likely to stick around in my opinion. Despite the strong performance though, their dividend is pretty small at just under 0.5%, while the stock's valuation is also a little rich, trading a bit higher than the sector. And if you're looking for growth, you should probably look elsewhere too, as they're only growing sales by a low single-digit percentage at the moment. So while I see this as a very similar stock to CRH in that both have very strong and resilient and reliable businesses for the long term, I just think CRH is the overall more attractive stock because of the stronger dividend and the cheaper valuation. So I'll put Veralto down at number 4 because of it. That will, however, bring us now, though, to the third brand new addition to the portfolio, and it's actually another newly IPO'd spin-off in the consumer health company Kenvue, ticker symbol KVUE, which Vanguard purchased close to $3 billion of last quarter, making up 0.07% of the overall portfolio. And this one was actually spun off from the giant Johnson & Johnson, and is a business that owns all of their consumer brands like Tylenol, Benadryl, Zyrtec, Motrin, Nicorette, Pepcid, Rogaine, Neutrogena, Aveeno, Johnson's, Listerine, Neosporin, and even Band-Aid too. Overall, as you can tell, the company is very large because of these iconic brands, resulting in over $15 billion of revenue across more than 165 different countries, where they hold #1 brand positions in 36 regions and launch over 100 new product innovations every single year. Because of that massive size though, you're just not going to get much growth here, with sales only expected to rise by a low single-digit percent next year, which is about the same for their EPS as well. They do, however, pay a nice dividend of close to 4%, and the stock is even down about a quarter of its value since IPO too. However, the valuation is a bit of a mixed bag, technically cheaper than the sector on adjusted earnings, but more expensive on GAAP measures and also on a PEG ratio basis as well. I kind of like this one though, but I just think that CRH should still maintain the lead here because of the similar dividend, but much better valuation and even stronger growth too. So I'm going to bump CRH up 1 spot to number 2 so that I can squeeze Kenvue in at number 3. I think this is a pretty appropriate ranking here so far. But with that said, purchase number 4 is going to have to actually take the lead here because it is, in my opinion, a very good stock. It's actually one of my newest purchases too, and that is a REIT, a real estate investment trust, in Extra Space Storage, ticker symbol EXR, which Vanguard did already own in the portfolio, but this time they decided to increase it by a whopping 55%, bringing it up to over $4 billion and worth just about 0.10% of the entire pie. And yeah, I really agree with this purchase here. It's right around the time that I bought it too, because it was going through a big dip recently. However, it unfortunately had a large recovery recently, climbing by over 25% in November and another 23% in December too, which I am so bummed about because I just really wish I would have bought more of this self-storage leader. The business is very strong, which I don't think will ever go away. The financials are there, the growth is there, the dividend is there at still over a 4% yield. And it's even not that bad of a valuation either, even after the rise. I mean, it's still cheaper by a PE ratio, and while it is significantly higher on the more important price to funds from operations metric, that historically hovers higher than where they're at right now. It's usually higher than 20. So I would say right now it's at least reasonable compared to their own historical average. But even though I'm a little more hesitant to buy at today's higher prices, I still think that this is the best choice on today's list, just kind of all around. So I'm still giving it the number one ranking here on the list. I don't think that top spot will be lasting very long though, because the final purchase of the list is easily my favorite of the entire bunch. In fact, it's one of my absolute favorite stocks in the entire market, and that is the massive behemoth known as Amazon, ticker symbol AMZN, which Vanguard tends to increase a little bit in each quarter, adding another 4.4% this past one, bringing the stake up to nearly $100 billion and worth over 2% of the portfolio. And you guys know what's funny? I was actually just watching some of the new Futurama episodes, and they had one where they parodied Amazon as this giant corporation that slowly takes over the world, and it even gets so large that it actually ends up taking over the whole universe. And obviously that's not really the case here, but I would say that it is pretty mind-blowing just how important Amazon has become in most people's lives these days, where they've just made it so incredibly easy to order almost anything you need from the convenience of your own home at even cheaper prices, which was heavily portrayed in the Futurama episode. And to be honest, it just makes me want to buy the stock even more because it's just so hard to imagine ever stopping this train at this point. I mean, just in the US alone, Amazon is already estimated to have over 180 million Prime paid subscribers. And those customers aren't going anywhere, as Amazon's retention rates are also as good as they can possibly be, right near 100% every quarter, which means people are not going to ever stop using it. It's a great service for, many different reasons. I know there's controversial stuff with a big corporation like Amazon, but I'm just saying in terms of what they offer, it's really hard to say no to that. And of course, they're also leading in many other areas too, like cloud computing, and they do tons of work in AI. They have investments in EVs, gaming, video streaming, music, and a lot more. And overall, it's just a company that is becoming too heavily entrenched into everyone's lives for it to ever go away. I think it's only going to get bigger, even bigger from here. And that's why you see these absolutely staggering financials, doing over $500 billion in revenue just in a single year alone. And while profits are lacking, I continue to say that it's almost of zero importance right now, because Amazon is just focused, and they have been just focused on dominating the world first, and the profits can come later. And that's why they've been so successful. And that's why despite those mind-blowing sales, they are still somehow growing at a double-digit rate per year, which is insane. It's unheard of at that massive size. And while the stock has risen recently, I still think it'll continue to climb long term. Yes, the valuation is rich, but you can't really grade it right now while they're not really caring about profits. And with the PEG ratio about half of what it was last year, I actually think it's not that unreasonable to begin with, let alone how much better it can get when they actually do start taking profits more seriously. So it still gets a buy rating from me, and I think everyone should be owning at least a piece of Amazon for the long term. So I'm giving it the number one ranking here as well, which is going to leave us with our final rankings here. I put Amazon at number one for the sheer dominance and unimaginable growth despite that massive size. Then we have Extra Space Storage pushed down to number two, but I still think that it's one of the best REITs out there and a great stock overall. Then CRH at number three, who I'm actually tempted to buy a little myself, but I think I do just want to wait for a little dip if I can get it. And then Kenvue and Veralto will have to take the final two spots here, even though I don't actually think that they're bad stocks, but the others are just clearly better choices in my opinion. But hey, that's just my opinion. I'd love to hear what you all have to say down below. Do you agree or disagree with my rankings? Would you make any changes? Do you like any of these stocks? Overall, I think it was actually a pretty decent quarter here of buying from Vanguard. I agree with most of the choices here, and there's definitely some solid stocks on that list. I can't really argue much against them. So I don't know. I enjoyed this one. It was fun to look at. And like I said, I think Amazon and EXR are the two best. And I think I'm actually going to be actively buying more Amazon, especially for our community portfolio. I think I want to add more. I'm just, I don't know. I'm really liking everything I see from Amazon. But anyway, like I said, I'd love to hear your thoughts. Thank you so much for stopping by, my friends. I appreciate all of your support. I hope you're all doing well. And I will catch you in the next video. All right, take care, everybody. Bye-bye.